1. Rising interest rates. The Federal Reserve's interest rate hikes can be a double whammy for smaller banks. The value of their existing assets, like bonds, decreases, while they struggle to offer competitive rates on deposits. This squeezes their profit margins. 2. Commercial real estate exposure. Many regional banks are heavily invested in commercial real estate loans. If property values decline or businesses struggle to make payments, these banks could face significant losses. 3. Uninsured deposits. A large portion of deposits in smaller banks aren't covered by the FDIC, Federal Deposit Insurance Corporation. If a bank fails and customers lose their uninsured funds, it can trigger panic and lead to bank runs, where everyone withdraws their money, further crippling the bank. 4. Fragile capitalization. Some banks might not have enough capital reserves to absorb potential losses from bad loans or declining asset values. This makes them more vulnerable to economic downturns.